The rise of China, the yuan, and the ambition to challenge the United States dollar, the US dollar USD, is considered the king of the global financial system. Then the Chinese yuan CNY is the emerging challenger, steadily expanding its influence. China, with the world's second largest economy, refuses to live forever in the shadow of the US dollar. Instead, it is nurturing a bold ambition to turn the yuan into a financial weapon, a tool to assert its global power. This ambition is not new as early as the two. When China's economy began its explosive growth, Beijing recognized a paradox. It had become the world's factory, exporting goods everywhere. Yet trade still had to be settled primarily in USD. This meant that China's immense interests remained bound by the rules of the game, set by the United States to escape that shadow. There was only one way to elevate the yuan. A crucial turning point occurred in 2016, when the International Monetary Fund, IMF, included the yuan in its special drawing rights SDR basket alongside the USD euro, British pound, and Japanese yen. This was the first time a currency from an emerging economy was recognized as a global reserve currency. It was like a passport granting the yuan entry into the exclusive club of powerful currencies. Not stopping there, China has deployed several parallel strategies, promoting trade in RMB bilateral agreements with Russia, Iran, Brazil, and others allow for the use of the yuan instead of the United States dollar. This helps partner nations avoid potential financial sanctions from the US. Establishing a separate payment system, China built SIPS, a network alternative to SWIFT, to support cross-border transactions in yuan. The Belt and Road Initiative 3, with trillions of dollars invested in infrastructure across Asia, Africa, and Europe, China encourages countries to take out loans, sign contracts, and make payments in RMB. The digital yuan ECNY. This is the world's largest pilot project for a national digital currency, allowing China to get ahead of the US and Europe in developing CBDCs, central bank digital currencies. The ambition is great, but the challenges are not small. For a currency to become hegemonic, it needs three elements: trust, liquidity, and free convertibility. The USD is strong, not only because the US economy is powerful, but because investors trust the transparency and stability of the American financial system. Meanwhile, China still imposes strict capital controls. Its financial markets are not fully open, and many investors remain wary of political risks. Nevertheless, it is undeniable that the yuan is gradually ascending. In the oil trade, some contracts have begun to be settled in RMB. After facing Western sanctions in 2022, Russia sharply increased its use of the yuan in transactions in many African countries. Infrastructure projects funded by Chinese loans also require payment in RMB. All of this is silently expanding Beijing's financial sphere of influence. The question is, can the yuan replace the USD in the short term? The answer is unlikely. The USD has built its dominant position over nearly 80 years, deeply intertwined with oil, gold, and international institutions. The yuan is still in the trust-building phase, however. In the long run, China's rise will certainly create a more multipolar financial order where the USD nitrogen monoxide longer has a monopoly but must share power with new rivals. Beijing's ambition is not just economic, but also political. Once the yuan is widely accepted as an international transaction currency, China will have additional leverage to expand its geopolitical influence, reduce its dependence on the US, and solidify its status as a global superpower. Perhaps the most interesting financial story of the 21st century is this confrontation: the USD empire versus the RMB dream. who wins and who loses, will not only determine the monetary system, but will also reshape the global balance of power. To better understand China's strategy, one must look at how IT is building an RMB ecosystem, a comprehensive network aimed at taking the yuan beyond its domestic borders and making it an international currency. First, China has established offshore RMB clearing centers: Hong Kong, London, Singapore, Frankfurt, and others have become transit hubs for transactions in yuan. This helps traders, banks, and international investors access the RMB directly, without going through the United States dollar. Each clearing center serves as a bridgehead for the RMB to seep into global trade. Second, China leverages its enormous trade relationships. IT is currently the largest trading partner for over 120 countries. When signing import-export contracts, Beijing encourages its partners to pay in RMB. For example, many African companies importing machinery from China no longer pay in USD but have switched to RMB. This is a silkworm nibbling on mulberry leaves tactic. Individual, small contracts will gradually form a huge network, making the RMB a habitual currency for transactions. Third is the oil weapon. The USD built its power on the petrodollar, the practice of pricing all global oil sales in US dollars. China now wants to create a petro-yuan. As the world's largest oil importer, Beijing has a negotiating advantage. Some oil and gas contracts with Russia, Iran, and even Saudi Arabia have been settled in yuan. This is an ambitious move because if oil, the most strategic commodity, escapes the USD's monopoly, the global financial balance will be shaken. Fourth is the digital yuan. This is not just a domestic payment method, but also a tool for China to pilot a completely new model, a state-issued digital currency capable of fast, cheap cross-border payments that avoid the control of the US-led system. If the C and Y is successful, IT could become a backdoor for the RMB to overcome barriers and go global. However, every ambition comes with obstacles. Trust is the core element. Many international investors are still skeptical of China's transparency. Will the government intervene too deeply in the financial markets? Will the RMB be truly freely convertible? Or will it be tightened during times of volatility? These are the questions that make IT difficult for the RMB to become a primary reserve currency, at least in the near future. Furthermore, an international currency needs a deep and broad capital market to absorb huge capital flows. The US has a multi-trillion-dollar treasury bond market that is safe and highly liquid, allowing central banks around the world to hold reserves. China does not yet have a comparable instrument, as its financial system is still heavily controlled and lacks transparency, but China has a unique advantage: its economic scale and growth rate. As its economic power continues to expand, trading partners will be forced to adapt to the new rules of the game. Once the volume of trade in RMB is large enough, trust will be built over time. In other words, the yuan may not yet be strong enough to dethrone the United States dollar, but IT is powerful enough to create a multipolar currency world, a world where the USD still leads, but faces fierce competition from the RMB, the euro, and perhaps digital currencies in the future. If the 20th century was the century of the almighty US dollar, the 21st century could be the era of financial multipolarity, where the yuan plays the role of the most persistent challenger